Hey folks, Dan Frio here with your Mortgage Minute. So this is the only way I can do it today. For those that don't know, my mother-in-law had cardiac arrest 2 days ago. I had to get rushed back to West Virginia. I'm going to go over and visit her shortly. She seems to be doing better, a little bit better last night. But my only way to do this remotely is by doing it live. So I apologize, and I hope you guys get this as soon as you log in. But what did I say yesterday? So let's recap yesterday's events. I said right before I left in yesterday's morning video, I said, well, inflation is going to exceed 9%. Why? Gasoline prices, period. But the consumer continues to spend and spend and spend. But I still say energy prices is what's going to cause, or what's causing a big piece of this equation. I was just watching CNBC prior to this, and they're even saying, there was a huge argument. It was kind of cool between all the people debating is it our government that's the problem? Is it the Fed that's the problem? Is it the economy that's the problem? What's going on? And they came back and said it's a third of everybody. It's a third of the supply chain issues. It's a third of our federal government, and it's a third from the Fed. So that's what's going on right now. But what did I predict yesterday? The first thing I came out and said is inflation is going to be higher than the 8% or 8.8% that they predicted. It was going to be higher than the previous reading. Why? One piece alone, just one piece, gasoline. Gas prices peaked last month. Okay, they're in my area, they were about $6 a gallon. They're now at $5. So we know that's coming down. So in the next reading, we're going to have a cooled off inflation number a little bit. There's still a lot of sticky pieces of this economy. We have wages that are sticky. You can't give somebody a raise and then come back and say, oh, sorry, we got to take that back. You have rents. I won't say housing in general, I'll say rents, because once you buy a house, you're locked in. That number's not going to move. Your mortgage payment isn't going to move. But if you continue to rent, and again, guys, I'm not FOMOing real estate to buy a property. I'm just saying if you didn't buy a property, your rents are going exponentially higher every time you renew. So those two pieces of the equation. Another piece is healthcare. Healthcare insurance is I think there was a reading just recently, the healthcare is up 25 or 30% year over year. That's another piece of the economy that's going to be sticky. And education. We know college costs are out the roof. So let's look at some of these dynamics. And I'm not going to get political here, but let's look at this pieces of this puzzle that's creating this whole issue. We have energy prices. Okay, Russia supplies about a fraction of our energy, but why aren't we doing more things here? Healthcare. I thought there was a healthcare system that was really supposed to help us. Why is healthcare continuing to just go out the roof? In education, you really want to help in the education piece, especially student loan debt? Well, do something at the college level, because what will happen is kind of like the housing market. If you just keep pumping this in and then go to the end result and say, well, maybe we'll just give people free education. Well, that's not doing anything to the prices of things. So why don't you put a cap or do something? I don't know how you put a cap on that, but go to the educational piece or revamp the student loan piece of the puzzle so people really know what the hell they're getting into. Okay, so that's my rant for today. So what we see right now is inflation. The consumer price index just came out at 9.1%. I called that one. So what's the initial reactions you're seeing in the stock market? Stock market's down about 200-300 points. What did I say about the bond market and mortgage rates? The MBS market, I apologize, I can't share it with you guys today because I'm remote, but the MBS market's crashing, meaning mortgage rates are spiking. I called it. Okay, I hate to say that, but I called both those pieces of the puzzle. So that's why I try to say to people, guys, please listen to what I'm telling you. Hey, Sir Ashley, what's up, brother? I apologize, dude. My mother-in-law had cardiac arrest 2 days ago. I live in Chicago. All my family and my wife's family is from West Virginia. I actually married my high school sweetheart, and we grew up in the same, just 2 towns away from each other, and went to the same high school. So I've been married to her for about 33, 34 years now. So I've been dating her since I was 15. But I greatly appreciate you coming on here, man. I got you scheduled on my show, I think in 2-3 weeks from now. I'll recast back with you, but thanks for joining me this morning. But what I was saying is all the numbers that I've come up with so far, I've nailed it. And I'm not saying, hey, kudos to me, but you gotta educate yourself on this stuff. I knew that the gas prices, the pace, what we're paying at the pump wasn't in last month's reading, the CPI. but it was going to be in today's reading. That alone, I knew it was going to be over 9%. Again, on the oil front or the energy piece of this equation, it moves everything. So if you were to manufacture something here, well, the raw materials to get that in manufacturing is from machines that run on diesel. Okay. So the tires on that bulldozer are made from what? Oil. Yes. So everything revolves around oil. We don't like to say that. We don't like to say it in today's world. But that's just what's going on. Okay. So I knew this reading was going to be hot, hot, hot. But I knew that mainstream media just likes to cover the hype of the world's ending and oh my goodness, what's going on? They really don't analyze a lot of this stuff. And then when I was watching CNBC, they have Moody's on, and that really jerks my chain too. I'm sorry, guys, I'm going on a rampage today. Moody's was a big piece of the equation of what crashed the market years ago because they stamped most of those subprime mortgages as A-rated mortgage bonds, and they were Z. They were terrible. But what happened to Moody's? Nothing, because they're just a rating agency. You shouldn't really pay much attention to their ratings, as everybody said at that time. So why do they exist? Okay, if they come out and they post everything saying, okay, this is a great bond, you should buy it, it's high quality, and then the thing goes bust, you should be able to at least go to them and say, okay, you basically said this was an A-rated bond, but it was junk bond status. So why are you not held liable for anything? But that's my tangent for right now. So let's recap what's going on. The inflation number came in crazy. Okay, over 9%. That's what I said. And if you check my thumbnail yesterday, I said it yesterday. We're going to exceed 9%. Again, the stock market's really pulling back, and the bond market's starting to really move and pushing up mortgage rates really high. Okay, so what's my expectations of what the Fed's going to do? And then what do I expect going forward? So here's my predictions. Is the Federal Reserve is going to meet the latter part of this month. They're going to do 75 basis points. They've already told us they're going to do 75 basis points. They're not going to disrupt the system, because if they come back now and say, we're going to do 100 basis points, which is 1%, they know that's going to be catastrophic in the markets. So they're going to give us future guidance of where they're going to go from here. So my expectations today is this. In this month's report, the Federal Reserve, or meeting, the Federal Reserve is going to raise the federal funds rate 75 basis points. And I'm going to explain what the federal funds rate is in a second. Then they're going to give forward guidance saying there is room in the future for another 75 basis points or higher move, but they're not going to be that transparent. They're going to say we're going to do everything we need to do to curtail inflation. They might give us a number that would help solve, a lot of the market's anticipations, but they might not give us a number. Okay, so I'm expecting they don't want to really put themselves, back themselves against the wall. So they're going to just say anything that's needed, we're going to do. Okay, so what we're going to start seeing now is the inflation number. I'm expecting it to peak at this point because energy has really come down dramatically. Again, there's some sticky parts in the economy that's not going to change. Again, we got wages. You can't pull that back. You got rents. You got education. You got healthcare. Those are areas that are going to be pretty sticky. What I mean by sticky is they're going to stay. Okay. On the other piece of the puzzle, we're going to have a lot of costs starting to come back down. But the one scary part, I drove from Chicago to West Virginia yesterday, and I usually, it's about 8 hours or 10 hours of cornfields, believe it or not. The scary part yesterday was probably a third of those fields are vacant. So I watch some channels every once in a while that basically say we're going to have a food shortage and it's going to be catastrophic. And I was basically, another just, those doomsayers that just want the clicks and all this other stuff. But corn is the staple. Corn's like oil in the food piece of the equation. If we have a corn shortage, we're going to have major shortages and major spikes in a lot of food, because corn syrup, the sugars created by corn, are in almost every food that we eat, in almost everything we drink. So if you start having those prices in the food equation starting to spike, that could be a whole nother round of this inflation front. But what I'm expecting at this point too is the everything's going to basically crash right now for the next probably most of today. And then what you'll see overnight is analysts coming through and doing all their due diligence and going through the numbers saying, you know what, guys, a lot of areas, and I haven't done this yet, but a lot of areas are pulling back. We got energy pulling back quite a bit. We have lumber pulling back quite a bit. I was just going through something else. There's a whole bunch of this pieces of the puzzle that's starting to come back. Okay. But again, there's sticky parts of this economy. So let me answer any questions that you guys have, because I didn't do my live event today. I'm ecstatic. All you guys are here with me, and it's early. I'm on East Coast now, and I'm usually Central Standard Time. I got to get up, get a whole bunch of stuff done, and then go visit my mother-in-law. So let me get to any questions that you have. But Sir Ashley, I greatly appreciate you coming on board, buddy. I saw you guys do a collaboration with Miss Hill and Jeb and all those guys. It was pretty cool. That's what I was trying to get together, and I'm going to start that as soon as my life gets a little bit stable. So sorry, folks. But let me get to some of the questions. Let's see what we got here. Good morning. Hope your mother-in-law. Thanks, guys. I hate to share a lot of my personal stuff on here, but I just want to be transparent with you guys. I'm traveling. It's tough. I woke up, took a quick shower, and I'm trying to get to it. So I greatly appreciate it. I truly do, folks. High inflation equals high rates equals high mortgage rates equals less buyers equals crash. Fed says stop inflation at all costs. Okay, Tony, let me address that real quick. And again, I appreciate your comments. I appreciate everything you're saying. Here's one piece of this puzzle that, and Sir Ashley might be able to help us in this equation. There's a lot of when you see a lot of these numbers, when they say, the housing numbers are terrible and whatever, you got to put some of this in context. If you have, like last year, if you look at foreclosures and then you see the numbers this year, you're going to look at it and say, oh my God, foreclosures are just out the roof. Well, when you're going against a backdrop of data that from last year that was basically non-existent, to now there are foreclosures, it's going to make that number look crazy high. It'll get a lot of clicks. And then once you start watching those videos, you'll understand that, oh man, does this person even know what they're talking about? So that's what I try to do on my channel, just give you the facts. I don't try to pump FOMO in housing. I just try to give you the facts. So, but Sir Ashley, thanks, brother. Hope you're cool. Oh, but let me get to some of this stuff, but I'll answer some of the questions here in a second. But to get a housing crash, there has to be too much supply for the demand. I haven't seen that yet. You're starting to see demand coming back. Again, it's on a backdrop that there was really nothing there. I'll still go back to my equations, and this gets me in hot water with a lot of people, is last year, 2019 or 2020 and 2021, we saw what? We saw the federal government pumping stimulus throughout the country that's on an unprecedented rate. You had the Federal Reserve basically giving free money out. Okay, you had those two things going. We know inflation's going to be there, but on the housing piece of the puzzle, there were forbearances where people didn't have to make their mortgage payment for up to 18 months. So if you're in a mortgage right now and you're struggling, but you have a lot of equity in your house and you kind of want to move, but you don't have a mortgage payment and you're working remote and still getting paid, why would you put your house up for sale? Because you have to do one of two things. You need something in housing, and this is what I try to explain. If you're in a forbearance, you didn't have to make a mortgage payment, but if you sold that property, yes, you cashed out, but now you have to go rent somewhere or buy another house. Or you stay in your current home and just keep living it out, watch your house keep appreciating, and you don't have a mortgage payment. So it's a win-win. It's like investing in stock with no money. You get my point. I hope you get my point there. So now you're seeing people that are having to start making their mortgage payments again. And they're like, okay, I don't really want to do this. It's too high or whatever the situation is. I'll put the house on the market now. So you're going to see a ton of houses coming on the market. You're going to see a ton of houses coming on the market. Why? Because more values are up here. So people are like, hey, I'm cashing out at the top end. Is it going to be the top end? I think it's going to be the top end. For the next year, or maybe a year and a half, we're going to see stagnation in the real estate industry. Hopefully. Okay, we all want this. We all thrive for this. We don't like when we have, home valuations going up 50% a year because it can't be sustained. So that's my take on that one. Let's get to the next question. Please, guys, don't leave any rude comments because I don't have any moderators today. I'm winging this. So I greatly appreciate you guys being on here. 75 basically, we have another step behind. Energy problem will go up 22nd, no gas, go up 22, and they will use energy for other suppliers make our go up too. Yeah, you know what? Here's good point, Tony. I just heard, and I doing research on this. I heard our federal government released a whole bunch of oil from our reserves. So they keep like an unprecedented amount there. They keep like 20 million or billion barrels of oil in reserves in case of basically catastrophic something majorly happening. There's rumors out there, and I'm still digging in on this. They're saying that our government sold a big piece of that oil reserve to China. Now, if that's the truth, it would kind of tick me off because why aren't you using it here? Okay, but that's my comment that I have on the 75 basis points, but I'm sticking with what I said. But Tony, I appreciate your post. The next piece of the puzzle is we have Benjamin. Let's see what Benjamin has to say. Benjamin, inflation, higher mortgage rates will and have caused a housing market has crashed in transactions. Do you think the recession will lead to a housing market crash in transaction? Benjamin, here, I'll give you guys my stance on the crash. Great thumbnails, great clickbait. But let's go through why something would crash. And to me, a crash is maybe 50%. I don't look at a 20 or 25 or 30% correction as being a crash. Why? Is because we had 30% appreciation in housing in some areas just last year. We've had 30% appreciation in housing over the last 2 years. So if we give that back, we're basically back to where we were a year or two ago. Okay, so that's my take on that. On the crash piece of it, I always think of it's about a 50% correction in this particular market. I'm still not predicting a crash. I don't think it's going to be there. Why? Well, let me rephrase this in two contexts. One, I think we're going to stagnate. Why? There's going to be a flood of houses coming on the market right now from pre-existing homes. Okay, but also the supply chain is kind of loosening up a little bit, and we're going to have more construction homes being available in the next Q3 and Q4 of this year. So when you start putting all that together, you're going to have a lot of supply. At that point, we might have a little dip in the market. Okay, but how big is the demand going to be? Because I don't know about you guys, but I talk to renters all the time and they're like, I finally just decided I'm going to buy because I just got my new lease agreement and they want me to pay $500 more a month, which is like 25% increase of what I'm paying now. So you're stuck. When I said that there's a lot of things that are sticky in the economy, I said, what are you going to see? You're going to see wages are sticky. You can't take that back. Education, healthcare. And when I talk about housing, I don't talk about houses or the house you own. I talk about rent. Because once you buy a house, you don't have to worry about that payment going up anymore. And if rates come down, you can refinance and drop down that rate. So you know the top end of where your mortgage payment's going to be. On the rent side of the equation, where are you going to be 2, 3, 4 years from now? Don't know. Okay, so I'm a proponent if I'm going to be in an area for at least 3, 4, 5 years at the minimum, I'm going to buy because over that duration of time, I might even just break even at worst, but I'll probably get some upside. And then I like home ownership. That's just me personally. But Benjamin, thank you for that. I don't think that's why I talked to like Sir Ashley's on our channel right now. He's a realtor down in the Carolinas. Fantastic guy. Great channel. Check him out. He's Sir Real Estate with Sir Ashley. Check him out. I have him on my show. I have people he's on the East Coast. I have people in the middle of the state. I have people in Colorado. I have people in Arizona, Florida. I have them on my show every week. And the main question and the reason why I have them, boots on the ground. What are you guys seeing? And what I ask is, what's your supply looking like? How many weeks of supply you have? What's the demand looking like? How many contracts are you getting on a house? How many days on the market are you seeing? So when you start analyzing all that on a daily basis, which I do, I don't predict a crash because the supply is upticking and you'll see all this clickbait. Hey, supply is up 500%. Well, yeah, because nobody that was in a forbearance put their house on the market unless they really had to. Now there's basically no forbearances out there. And if you're in a forbearance, you're probably in foreclosure mitigation, or they're trying to solve a problem here, which the banks learned their lesson in 2010. Don't foreclose on these people. Just try to work something out. I'm seeing terms all the way to 2.5% fixed rate on a 40-year term to help people stay in their properties. So you're not going to see, you'll see some foreclosures, but again, the doomsday sayers are saying, oh, foreclosures are up 500%. Well, yeah, if you go from 1 to 500, that there's your number there. So I'm not predicting a crash. I'm predicting that things stabilize. You have days on the market are starting to go up a little bit. But the biggest thing is you have bids on properties. Sir Ashley was one of the ones that said it. You used to have 30, 40, 50 bids on the property, so people would do just stupid stuff. And if you did it, no disrespect, but it wasn't a wise financial decision. They waived contingency. They waived this. They'd pay $100,000 more than the house's value is worth. All this other stuff. You're going to look back, 6 months or after you get into that property and start living there, you're going to say, what did I do? Because especially if you have to move for example, in a year or two, it's not going to be. You already paid $100,000 over market, so you're going to have to sell it $100,000 less than you paid. Okay, so I can't explain it any better than that. But I still don't see the supply-demand dynamics moving in a direction that you'd see a crash. And I'd be willing to, or I would love to debate that with anybody. And if you want to debate it with me, especially if you're a realtor and you have some data that I don't know, please reach out to me. I'd love to have you on my show, because I'm transparent. I want people to see out there, because the biggest fear in the market that we have right now is people have, there's the interest rate fear, but the biggest fear that people have is the market going to crash? So am I going to pay $500,000 for a house and then next year it's going to be worth $350,000? Okay. But again, guys, look at the dynamics when you're thinking of that crash, or what does everybody say? Or what's the main ingredient when people talk about a housing crash? There's one event and one event only that they talk about: the 2008, 9, 10 crash. What other time in history ever did you see a housing crash like that? It was basically self-induced by greedy bankers, greedy consumers. Everybody wanted to buy a house because it was like the new Bitcoin. I got to have a house and I'm going to make a ton of money. And then they found out, oh, shoot, I bought it $60,000 Bitcoin and now it's $19,000. Oh, geez, what did I do? So that's what's happening a lot behind the scenes. So that's that question. So thank you so much, Benjamin, for your question. We'll go to Jay. Hey guys, I'm by myself. I'm running solo, so bear with me here, guys. Man, I got a lot of questions. Thanks for doing this, Dan. You betcha, guys. I'm in West Virginia. That's why I have this backdrop. I'm going on my laptop. I'm trying my best here, guys, just to inform you guys, because my goal is, what's the tagline? My goal is to inform and educate you guys everything real estate, especially the financing piece of the puzzle. So to highlight this, the inflation number came in like I expected, exceeded 9%. I'm going to dive into that in great detail to come back to you guys tomorrow and give you basically the breakdown. And we'll probably see the market starting to stabilize once people start digging into those numbers and realize, oh boy, big piece of this equation was oil. Because again, I'll reiterate myself, you got used car prices dramatically dropping. You have energy prices that have dropped substantially since these numbers were basically created. You have lumber, you have a whole bunch of supplies that are really driving some costs down. But again, the areas that are really going up are wages, healthcare. There was a healthcare report that I just got from my employees that healthcare is going to go up about 25 or 30%. You guys don't see a lot of that. You do on your paychecks, but when you look at it on the owner side of the business, you look at it, it's like, oh my goodness, healthcare is crazy. It probably goes up 15, 20% a year is from the employer. And so those are the things that I see. But let's go to the next question. I apologize to ramble. I need to start a clock here. What's the cause for the corn shortage? Labor, is there growing into the fertilizer? So fertilizer, most of our fertilizer comes out of the Ukraine-Russia area. Believe it or not, I own some stock in a fertilizer company, and I don't know why, but its yield is about 15% right now. So that's why I bought it. I really don't care what the stock does, and I like the piece of the puzzle that it's in. It gives me about a 15% yield, so I'm going to hold on to that forever because it'll basically balance itself out. But fertilizer is the biggest piece of this puzzle. A lot of it comes out of, again, Russia and the Ukraine area. So we don't have the fertilizer. So the farmers will spend a bunch of money putting all the stuff in the ground. But if you don't have the fertilizer, it's going to go poof. And I see some videos every once in a while that I watch, and it's like, doomsday. It's going to be, the doomsday shows where people, hoard all their foods and they dry pack and everything and they put it in a cellar or whatever. People do that. So I watch some of those channels just to figure out, what's their thinking behind it. And until that drive yesterday, I was like, food shortage. How are we going to have a food shortage in the United States? Well, guys, again, driving from Chicago to West Virginia, I usually pass hundreds and hundreds and hundreds of miles of corn. A third of them it was dirt. Or just, my wife even said, did they already cut that down? And I'm like, no, it's corn from last year that was still at the stock level. So I don't know where this is taking us. That's not my wheelhouse. My wheelhouse is the economics and the financial markets. But that might be the next shoe to drop, because if you have food prices going up exponentially, that's going to drive inflation too. But that's my next watch category because of that drive yesterday. Next question: inflation up, rent up, home values go up. Instead of renting, some might just bite the bullet and panic buy. I'll agree with you. I don't want to say panic buy, because you got to be due diligent on what you buy. Make sure it's your house. What you got to realize is this isn't a stock where you can just buy today and sell tomorrow and have a $1 transaction fee. When you buy a house, there's thousands of dollars of fees. Even if you don't have to pay, in most cases, I'm a mortgage broker. In most cases, our fees are $895. That's it for my lender piece of the equation. Then you have all your recording fees and all this other stuff that really add up. They add up to thousands. So that's why I would say, if you're going to spend $5,000 or $6,000 to buy a house in costs you can't avoid, you have to be in that house at least a couple years to recoup all those monies. Okay, but great question, and I greatly appreciate that. The next piece is, I'm trying to go down one by one. Let's see what it is. I believe National Association of Realtors report Q2 22 is coming up later this month. I think that report might be one that spooks the real estate market, not a crash, but I agree. And again, what you're going to see is you can do this data. I do go through an economic calendar every day. And then I subscribe to probably 100 different newsletters and blogs and everything. This is my job basically at our office is I oversee all the loans. But what I do is I market. I try to educate you guys so you find value in what we do. You're like, okay, I don't want to use just that click, and I get a mortgage and I don't really know what the heck I'm getting and I don't really know much about anything. We like to educate you guys to say, okay, here's the programs you fit into. Here's why. Here's maybe a way we can do this to maybe help you. One little caveat, I'll give you a trick. Any mortgage people are out there. When you're looking at a mortgage rate right now, and a lot of people freak out, especially those that are putting 20% down, do me a favor if you're a loan officer out there. Put down 19%. Put down 19%. Why? Okay, but you're going to say, okay, Dan, if you do that, you're going to have PMI. Yeah, you're going to have PMI probably for 2-3 years. But that rate is usually about 0.25% lower than if you were to put down 20%. Believe it or not, that's a little trick of the trade. That's what we do for you. I don't know why I'm explaining it here because my competition's going to find out. But these are just little things little nuances that we can help you and save you thousands and thousands and thousands of dollars. But that's the take on that one. So thank you so much, Joey, thanks guys for even joining me this morning. I thought I was just going to be on here by myself for about 5 minutes doing this report the best I could. And then you guys started jumping on board. So greatly appreciate it. Hey, Felicia, construction times for new single homes and single are taking 18 to 24 months. What do you recommend since rates don't? Guys, I'm not a proponent right now. I'll say it. I'm not a proponent of building. Because it scares me on a number of fronts. One, if you look at your contracts, it's going to say in there that the builder can push any price increases over to you. It doesn't say anywhere in there where if there's any price drops that they'll give you a better credit. But a lot of builders are starting to realize, oh man, we're in a pickle right now because we have a lot of cancellations going on. And I got a video coming up shortly that's going to tell you, how to get out of your contracts. There's some easier ways than you think, and you should be able to get all your money back. But the building piece scares me because what's the supply chain issue going to do, especially when you're looking 2 years out, 2 years from now? Are you even going to want the house 2 years from now? Just saying. So that scares me. Where are mortgage rates going to be? What's your cost of money in 2 years? I have no idea. I really don't know where rates are going to be on Friday. So could rates be 9, 10, 11%, 2 years from now? Could be. I'm not expecting it, but it could be. So could you afford that house, especially if they come back and said, oh, it's going to cost you another $50,000 because our materials just went up. So I don't like, not being in control or not giving up that much control to do this. So my preference would be, and this is just my preference, you asked, is I would buy a house, even if it's kind of not the nicest. But look at the structure or the frame-wise. Is the size there that you need? And then renovate it, okay? Then you can do it, customize it basically to exactly what you want to a point. But you know what you're getting into. You can do the financing now. You can monitor and watch your materials and do things that way. That's that's how I would do it. I've never built a house. I just don't like the whole process. I think it's kind of cool to be able to pick out anything you want, but I just don't like, especially a 2-year time frame. That's not for me. So, but Felicia, thank you so much for that. Let's see the next one. Hope your mother-in-law is doing. We talked to her last night, and she's coherent and she's doing a little bit better. And I'm going to go over and visit her in just a little bit. Then I got home, and my mother's basement bathroom is my mother's basement bathroom is backing up. So I have a plumber on the way too. So I got a full day of events, folks. But I appreciate you being on here with me. Next one is Stella. Stella, hey there. For the people whose mortgage payments are paused due to the pandemic, now that it's being removed, do those people have to back pay all? Great question. That's a great question. I haven't done a forbearance thing in a long, long time. So if you're in a forbearance, here's what's normally happening. What was supposed to happen is the government came in and said, okay, what we want you guys to do is basically put the money at the back end of the loan, meaning after you have paid 30 years, you're still going to have a balance. So let's say you missed a year's worth of payments, and that equates out to $20,000. $20,000 will get added to the back end of your loan. So after you pay the loan in full over 30 years, you're still going to have that balance remaining. That's one option. Another option is they will change your mortgage payment up to 12 or 24 months. They'll take that $20,000 you owe, they'll divide it by maybe 12 months or 24 months and add that to your current mortgage payment. That would be catastrophic. Those are the areas that they're most likely doing. What I'm hearing now, and I've actually talked to several people about this, what they did is their bank didn't do any of those. They said, okay, we know you're struggling, the payments, this, that. We're going to redo your note. We're going to modify your note. Now, the modification is much different than where we were in 2010. Modifications back then, they would lose all your paperwork, probably shred it or throw it away. And they would tell you either hold on. And then the next thing you know, you got a foreclosure notice in the mail. Okay. They learned their lesson. Okay. Because the world crashed. So now what they're doing is they're modifying your loans to very good terms. So if you're in a forbearance now and you're still struggling, get a hold of your mortgage lender and ask them, what modifications can you do? I'm seeing this. I'm seeing rates in the 2s, 3 range that they're rewriting your mortgage or modifying your mortgage on 40 and even sometimes 50-year mortgages. So you're going to say, the first thing you might say is, I don't want a 50-year mortgage. Don't think of it that way. Think of it, you own the house, and it's kind of like paying rent, okay? But every time you make a payment, you're paying down some of your principal. So even if your house value stays stagnant and you continue to make mortgage payments, your mortgage balance is going to go down. So you're building equity in the home. So it's still, I think, a better option than renting. But that's my preference. Don't shoot the messenger. I'm just telling you my preferences because you asked. So that's what my thought is, and that's what, if you're still struggling and you're at the tail end or just out of the forbearance, please get a hold of your bank because they're working with people really diligently right now. Another caption here for those out there that do have a mortgage right now. Most of you watching this are probably on the fence of maybe looking to buy. But if you're in a mortgage right now and you took it out over a year ago, what I ask you to do is if you got a conventional loan and you have PMI, please call your mortgage lender and ask them to do a PMI analysis to see if it can be dropped. The reason being is home values across the board in the last year or two are up probably 30, 40%. So you should have enough equity in your home at this point to be able to drop your PMI. If you can drop your PMI, you're probably looking at about $200 to $250 a month lower in your mortgage payment. So that's the one thing I'm going to try to reiterate every week for those out there that do have a mortgage. Please call your mortgage company if you have PMI and ask them to do a or a PMI analysis. However, if you have an FHA loan, it does not work. FHA requires if you put down less than 10%, you have PMI on there forever or until you pay off, you refinance the loan. If you put down 10% or more, you have PMI on there for 11 years, and it is etched in stone. They don't make any changes on that. It is etched in stone. So, but if you have a mortgage out there and you have PMI, please call your mortgage advisor or mortgage company and ask them to do a PMI analysis. So that's that part of it. Great question, though. Hey, Don, the other side of the inflation / higher rates is that those with money see in hard assets, real estate, and inflation heads. So cash buyers continue to increase their provide. You're right. I mean, you're dead on there. The other piece of this puzzle, Don, is maybe our savings rates will get up to, instead of 0.000001, I think it is, to 0.001. So if you have money in a savings account, you ever look at the rate of return you get, it's down to the fractions. So as interest rates do pop up, those out there on a fixed income and maybe rely on your savings or a CD for income, this is great news for you guys. So that's that. But great comment, Don. I greatly appreciate it. Guys, do me a favor. Let me know where you're clicking from, because Lord knows you're not clicking from the West Coast, because it'd be 5 in the morning out there. Good morning, Dan. Hey there, Max. Thanks for joining us this morning. Benjamin, what do we got from Ben? I'm referring to a house crash in transactions and not crash. Oh, got it. I agree. A crash in prices will not come in 2022. Guys, I can read. It's just hard. I got a glare in my face. And the longer interest rates stay higher, the more comes. Yep, you're Ben. You're on it, buddy. I don't have anything else to say. I just have to say I agree with your analogy there. Oh man, you guys are fantastic today. There's tons of. Hold on, guys. I usually have a moderator, but I don't today. Next one, please don't. Thank you so much, NL. We're going to go visit my mother-in-law here shortly. For those that don't know, why I'm here in this backdrop is I had to leave Chicago yesterday and I headed to West Virginia. That's where I'm originally from. My family's here and my wife's family is here. My mother-in-law had cardiac arrest the other day. I had to get back here. She's stabilized. She's doing a little bit better. We're going to go over see her shortly, but I'm trying to work the best I can. I'm at my mother's home and I'm trying to do the best I can just to inform you guys of what's going on in the markets. Because what I don't want to do is, you're sitting on the sideline. Just, I love educating those out there on all this stuff. So thank you so much. If inflation is 7 to 10, eventually wages need to go up. There was a revolt in the housing fix it with cheaper versus wages, but might still be more in dollars. Yeah. I think we've peaked out in inflation. I'm going to get a whole bunch of backlash on that, saying I'm an idiot and all this other stuff. Guys, I'm just telling you what I think. I've done this for 33 years. I have a degree in economics. I moved actually from West Virginia to Chicago to get onto the Board of Trade. Couldn't get a job because I was 22 years old and just a greenhorn. Actually fell into the mortgage industry at that point, and I've been doing it ever since. I love it. It's making me cray. But that's how I got to Chicago. Is I graduated from West Virginia University. I had $3,000 in the bank. I bought a car, packed it up, and moved to Chicago. Is that or New York? And I'm like, well, Chicago's a little bit littler, and I'm from a little town in West Virginia, so it freaked me out anyways. And I got a job, and I've been doing that ever since. I've married my high school sweetheart. I've been dating her since I was 15 years old. Went to the same high school, and once I found that job up there, I came back, proposed to her. We got married a year later, and here's where I am. So we're back in West Virginia right now, visiting my family because my mother-in-law is not doing too well. So, but thank you guys for watching this. So if I don't post today or tomorrow, it's not that I don't care. It's just I got 50,000 things on my plate right now. So I greatly appreciate you guys being on here today. I really do. It means a lot to me. Finally in my house after 16 long months and still love popping in to get your take on markets. Keep up the great works. Thanks, Sean. I appreciate you guys being on here. And if there's anything that I can help you with, or there's a debate you want to, or some data, I'm not the kind that I only put people on here that agree with me. I'm going to have people coming on in the next couple of weeks that we have totally different views on the market. But I want dialogue. It's not going to be a bitching match. I just want to say, what's your content? What's your facts? I know my facts, and I'll present those. But if somebody can change my mind, God bless you. So thank you so much for that, guys. Do you think housing inventory reaches 1 million or more by the end of the year? I honestly, Salman, I don't look. I try not to look at the macro. I try to look at the micro. And here's why. You can say, well, the housing market is crashing and it's good, this and that and this and that. Well, one housing market might be. You could also say, well, the housing market is crazily out of control. Well, if you're in Austin and you had a 50% appreciation or Phoenix, yeah. But if you're in, like, I'm in Fallsview, West Virginia right now, you might have had a 10 or 15, maybe a 20% raise in value here in the last year or two. But is there a bubble here? No. Okay, so I try to get realtors on here all over the country to say, what is going on in your territory? If you're watching here and you're in San Diego, do you care what's going on in New Jersey? No. Why would you? Okay, so that's why I try to get boots on the ground all over the country. So if you're a realtor out there, I keep pleading to people. Nobody ever reaches out to me. If you're a realtor out there, please reach out to me. I'd love to talk with you. We could put you live and just give me your boots on the ground data on where this market is. And that's why I have Sir Ashley, I have Jeb Smith, I have Rick McCone, I have Summer. I have, there's a list that go on. Courtney, we had Courtney on the other day in Denver, and the scenarios that they paint are all virtually the same. It's like, yeah, it's cooling down. Why? More houses in inventory. Thus, we don't have 50, 60, 70 bids on a house. We have the normal 5, 6, 10. Okay. We don't have people now willing to pay $100,000 over ask. We don't have people, pushing out no contingencies where we'll buy it no matter what, even if it doesn't appraise. We have it coming back to normal. That's what we need. Okay. That's what we really need. So what I focus in on is areas. I don't want you, again, I try to dig in on that, because if I'm in Chicago, do I care what, Tampa's doing? No, because it doesn't affect me. So that's why I try. If you're in areas, I always ask people too, where are you coming from? So if you would post there, where are you from? What location are you at? Because the more viewers I have and they give me this data, I can go out there and find realtors in that state or in that region to give us your local numbers. But thank you for the post. And I forgot my mouse. So I'm also trying to work this with this clicker thing, and it drives me nuts. I think prices are catching up with the times. I think they are too. Next one is Dan. Thoughts on selling in Florida for relocation and buying in the new spot? Should I start looking at locking in a rate now or until current rate house is under contract? I would lock in. I would. Here's what we do. This is a great question. When we pre-approve you, we have options for you. We have a program called Lock and Shop, where you can lock in now while you're shopping. Okay, the fantastic program. But you're going to say, well, wonder if rates go up. Well, you're probably not going to ask that, because that's why you're locked. You're locked in. You don't have to worry about rates going up. But wonder if rates drop. That's the number one question that I would ask if I was in your shoes. So if rates drop, we're going to do one of two things. One, we're going to go back to the current lender that we have you locked in at, and we're going to renegotiate a float down. Most of them have a float down option, and some are very good and some are very bad. But so we're going to work on a float down to see if we can get you down to market rates and if there's any cost for you. If we can't give you a substantial float down or getting you to current market rates at that point, what we're going to do is we're going to move you to another lender. I'm a mortgage broker. I work at a bank now. I'm federally chartered, but we also have about 120 different lenders we can broker out to. And that's basically 99% of our loans we broker out still. Why? I never wanted to work at a bank and be pigeonholed to their mortgage rates and their mortgage products. I only would go to a place that offered a huge assortment of things for my clients. Okay. But the nice thing about why I joined a bank is, and it took me a long time to find this, is I needed a federal charter, meaning now I am federally chartered, meaning I can do loans anywhere in the whole country. So the past few years, I tried to get in every state. It cost me about $1,000 a state every year, and about 8 to 10 hours of education in every state every year. So you can see it costs $50,000, $60,000 to do my licensing, plus 200 to 300 hours of classes. I just couldn't do it anymore. So I found a bank after years of searching. Now I'm a bank, but I'm also a broker, and I'm also federally chartered, meaning I can help you anywhere in the country. So that's the story behind all that. Dennis, what are you doing up, dude? Dennis is out in California. What time is it out there, man? Dennis is out in California. Good morning, buddy. I don't know if you saw the headlines, but inflation numbers came in higher than 9. As I said, the stock market plummeted. I haven't checked it since we came on live, but the stock market at the time was down substantially over 300, and mortgage rates, the MBS market was crashing. So again, my thoughts on all this is the knee-jerk reaction is going to be boom, clickbait. Okay, you're going to have everybody and their mother out there with YouTube thumbnails, CNBC, NBC, all the news channels also going to say, "Oh my God, inflation is just crazy. You might as well just move to another country." It'll get you to click. It'll get your attention. But what I try to do is, I use that as shock and awe as well, but I try to give you the facts behind it. And again, I called it. The main reason for this big number is energy, oil. Okay, the oil numbers were in this last report that just got posted today. They were not in the previous report or at the substantial heights that we saw. So oil peaked out about 3, 4, 5 weeks ago, and it's been down substantially since. It's down about 20% in the last month. Natural gas prices are plummeting. You have a lot of things like lumber, used cars. Food isn't moving still anywhere, but I still have to dive into those numbers, and I'll be back tomorrow to kind of dissect it. But you're going to see, what you're going to see is the markets, once they analyze this, and once the shock and awe and all the people got their clicks and all the stations got their views, you're going to have an analyst coming in now saying, that number wasn't so bad. If it wasn't for oil, and now the oil is down 20%, we're probably going to see a retraction in the inflation numbers. So you might disagree with me. If you do, God bless you. I just like to know your numbers behind it. So what I'm expecting to happen, here's the game plan, and I'll try to answer some questions after this, but I got to get out of here shortly, is the markets will absorb this data. Probably within 24 hours, it'll come back and say, okay, it's not as bad as we thought. Okay, so that's that. So now into the Federal Reserve. What are they going to do? Well, the Federal Reserve already told us that they're going to move the federal funds rate 75 basis points at the next meeting. And that's going to be on the 26th and 27th, if I recall, of this month. They're going to do that because there's already enough volatility in the markets that they're like, we don't want to really shake this tree much more because it's going to crack. So what we're going to do is we're going to do the 75, and then we're going to give future guidance. That's the number one piece of the puzzle that we're going to focus in on. What is their future guidance? We already know what they're going to do. And there's probably, I'll say, a 99.9% certainty of that. So here's my backdrop. They're going to have more readings prior to their next meeting that's going to take place in September. So we're going to have a July, we're going to have the July inflation numbers out next month. You're going to see those coming down sub 9, okay? They're going to be sub 9. So then the Fed won't be basically, their backs won't be to the wall that they have to do something crazy. Now, if the numbers come in higher, I really want to see where and why before I come back and say, oh, here's what they're going to do. Because you're going to start seeing some numbers, and you're going to start seeing the stock markets, why they're reacting the way they are, is they already know that what the Federal Reserve is going to do at this meeting. Now, they don't know what they're going to do at the next meeting because their forward guidance was, we're going to do whatever it takes. What is whatever it takes? Okay, so that's what we're going to analyze. So that's what my focus in on from here out going forward is where we're going to see at the next Fed meeting, because everything revolves around the Fed right now because it's inflation, it's housing, but everybody points back right at the Fed. So that's what I'm thinking of that. I'm pretty sure at this point inflation has peaked. One big reason is, again, the energy sector. So we'll probably have at the next meeting I don't know what's going to happen, but I'm expecting the Fed to come back saying at the next meeting they're going to do 50 to 75 basis points again, but it would depend on how the economic numbers come back. So that's that piece of the puzzle. I'll answer a couple more guys because you guys are grateful enough to come on here. I'll answer as much as I can. The next thing is I would love to get a 50-year mortgage on my rental. That would help improve. Yeah, you and me both. So there was some rumblings the other day in some social media and some other things, 50-year mortgages. Guys, I've never heard of it. There's not going to be a mainstream 50-year product. Meaning, when I talk mainstream, I talk conventional financing, FHA, VA, USDA, all that. There might be boutique programs. There's programs such as non-QM that if you don't know what the heck I'm talking about, next Tuesday I'm going to have a special guest. He is a non-QM representative. He'll give us all the facts on non-QM. Then you guys decide if it's a good product or not. You don't have to take it, but I want you to be educated and informed when it comes to real estate, especially the financing piece of the puzzle. So yeah, I agree with you. I wish I could get a 50-year mortgage as well. Brad, mortgage stays same payment, rents go up always. Yep, I agree with you, as long as you don't have an arm. You're in Arkansas. Thanks, Brad. Thanks for those comments. I agree with you. Once you buy, you're good. But the reason why I'm still at Bolingbrook, dude, you're right in my neck of the woods. My office is in Naperville. That's the next one. Sorry, guys, but I'll quit rambling. What do we got? We got Bolingbrook, Illinois. That's right in my wheelhouse. Long Island. We got New York. New York, I could do loans there now. We had back in, I think it was January, February, March, we probably had 50 people calling us within that time frame needing a mortgage. And that was one of the conduits that made me make this final change to a bank to make sure we're federally chartered. So anywhere out there in the country you guys are, we'd love to help you. Let's see, Dennis, as long as fixed-term inflation, free money. I'm with you, buddy. Oh, man, we got tons of questions. Where are you, Dennis? We got Tinley Park. We got, what else do we got here? Next one is don't count us West Coast. What time is it out there? I'm totally lost on all my thing. Mike in Tinley Park. Thanks for joining us, Mike. I'm in LA. Dude, it's got to be like crazy early out there. I'm not a morning person. St. Louis, Missouri, love your channel. Currently building a house. God bless you, man. If we can help you in any way, we have long-term locks or anything, or if you just even have any questions, love to answer those for you. But Wavy, thanks so much for being on here. Dennis, you're on a roll, buddy. You usually don't ask a lot of questions. GTI is lagging indicator. If you want to have an idea where place is going to watch oil, dude. And then you're probably killing it on those options that you were trading. But let's see. The next one is here from USDA loans affected by increased interest rates. Yes. Therefore, approval amounts less than interest rates were lower. Yes. Thanks for yes. Okay. So here there was a show that I was watching the other day. I think it was Sir Ashley. He was on a show with Miss Hill and Jeb Smith. And one of the questions are USDA rates really in the twos? No. So if you're a realtor out there and you have shows and you have a lot of financial questions, please, invite me. I'd love to be on your show because so many times you have 4 or 5 realtors talking about stuff and then they try to talk about the financing thing and probably a third of their questions are financing. And I'm not saying you don't know what you're talking about, but I do. You might not have the exact answer for them. I should, is the way I put it. The reason why when I take pride in my business, I want to make sure I know more than almost every other mortgage person out there because I need to make a difference. And how do I put out myself, different from the rest? Is because I know my products. I know what's the future is going to bring and all this other. Not really the future is going to bring, but you get my point. Sorry, guys, I'm rambling today. But USDA's, yes, rates will go up. That'll affect how much you qualify for, maybe. But rates are basically normal. They're pretty stable. They're very comparable to the FHA and VA. That's the way I'll put it. East Coast Florida is slowing down. Now the CPI staying high, keep my bond paying high. I remember my grandfather getting 10% in CD here. Yeah. I would love at this point in my life, I'm 57 years old. I'd love to be able to get 10% on a CD. I'd put all my money in there and just walk away and retire. Cali, man, we got a ton of people in California. What time do you guys get up out there? All right, let's see what the next one is. I hope we see prices to come down. We need prices to come down. I'm not saying, I'm not always a proponent of, I hope something crashes so I have the benefit of getting in. So many people are like, I hope housing just crashes down to zero so I can buy a house cheap. There's millions of people who own houses. I don't want that to happen. I want stability. I don't want you, if you bought a house in the last year, two, three, to suffer. You know, but we also need an entry point for people to get into this market. But at some point, you got to say, okay, do I need to go to Starbucks every day and go out to dinner Friday, Saturday, and Sunday and do that? Maybe you cut back on one or two of those things. That'll save you maybe a couple $100 a month, and that now will be able to afford a house. But just saying. Next one is, well, this is a long one. Currently living in Washington, not thinking, God bless you on that one. Looking to move to Florida. Any thoughts on what might happen in 55 plus communities, especially someplace like the Villages? They're kind of their own bubble. I have actually family that lives in the Villages. That is the coolest place. Went there last year. I have a place in Cocoa Beach, Florida. But we went there last year. A cousin of mine's there. And everybody's in golf carts. You got to love to golf and love to drink if you move there. So he loves it. He loves it. Every day he's golfing, swimming, doing this. He's in his early 60s. He retired. He was I won't tell you who he worked for because it's a little private. But he's loving life. So if you want any feedback or any data from there, I have several realtors down in those areas that would love to help you and give you the feedback and all the data in those communities. But that community down there, the Villages, it's huge. I personally like, if I'm living in Florida, I like the beach. So my place is right on the beach. It's way inland, but if you move to the Villages, you got to make sure you like to golf and you like to drink. And they do that until about 8 o'clock, and then the whole place shuts down. It's crazy. But everybody's hammered by 8, and they just go home, go to bed, and wake up and do it again the next day. So great information. And man, they just keep adding up. We got people in Florida. Very little. See, here we go, guys. So if you're watching the channel in Florida, if you have low inventory, very, very low inventory. So if I have a pen and I only have one pen and there's 30 people that want it, I can keep this price of this pen is going to keep going up and up and up till but everybody else bails out and we have one winner. That price is going to be much higher than if I had just one person that wanted to buy this pen. You get my analogy? Okay, so I'll leave it at that. For those that didn't get it, I apologize. Let's see, the next one is Gig Harbor. Man, we got people everywhere. I am blessed to have you guys on here. Let's see, Dennis, try SQQQQ during well. You're probably killing it, buddy. What do you think the chances of the Fed raising? I don't think they're going to raise it 100 basis points this time. If they do, I'll even be shocked. I'm shocked every once in a while of what things happen or what does happen. But we're already in a pretty shitty situation. Sorry for my French. I hope YouTube doesn't ban me. So if they now jump in and say, we're doing 100, I can see them coming up, giving forward guidance going forward of, hey, we're going to continue our 75 basis point move. That's what I could see there, but I don't see them at this meeting doing 100 basis points because the economy right now, it can't use it. And guys, you got to remember too, it's an election year. Just saying. Okay, I just want rates to stabilize, in my opinion. Yep, I agree with you on that one. Thanks, Wavy. What is your opinion on LLPAs? Seems that they're punitive to a degree. What is your opinion on LLPAs? I don't know what you mean by punitive. For those out there, LLPAs are this. We call them, they're really called loan level price adjustments. So here, let's say, for example, the current mortgage rate is 5. Just saying. Okay, LLPAs, loan level price adjustments, are adjustments to that rate based on credit score, loan to value, kind of property. So let's just break this down. So your rate's 5. An LLPA is, if your credit score is 740, you get 5. If your credit score is 680, you get 5.5. That 0.5% bump is a loan level price adjustment to that rate because your loan is riskier because you have a lower credit score. Same thing happens if you're buying a single family home versus a 4-unit building. There's more risk there, so your rate's higher. Those are the biggest components of the loan level price adjustments is your credit score, the kind of property. If you're looking to pull out cash or just do a rate and term or a purchase property, there's a whole slew of them. If you ever saw a rate sheet, it's about 6 pages long. That's why thank God we have computers now that they can factor all this. I don't know what you mean by punitive, but they've been in there as long as I've been doing mortgages, and that's quite some time. But thank you for the question, Mike. You must be in the mortgage field because nobody else would know that. In Central Florida, currently low inventory, especially pool houses, but time on the market is starting to increase. Yes, that's another example. So what we just saw here, guys, is there's low inventory. So until the inventory really goes skyrocketing, you're not going to see any prices really even deplete at that point. We got Arizona. Man, we got everybody here. So I think that's it. Thank God. Okay, so we've been on here for an hour. So we'll conclude it at this. Yesterday I did a video and I said the inflation number is going to come in above 9%. What's going to happen? The shock and awe is in the system. You're going to see the stock market get pummeled right out of the gate because of this number. You're going to actually see mortgage rates spike. We saw all the above. We saw the CPI number come in at 9.1. As I stated, we've had the stock market at the open down 300, and we have mortgage rates spiking. I apologize, I can't show you my other screens because I'm remote today, but that's what's going on, and that's why I wanted to do my report today. This morning was just going to be just a simple video to give you my mortgage minute, but I figured I'd answer questions while I was here because I wasn't here yesterday. So, guys, I am heading out right now. Again, I'll be doing this remote for the next couple days. I'm in West Virginia visiting my mother-in-law who's ill and in the hospital. So if you can say some prayers for her, I'd greatly appreciate it. But I'm here visiting my mother and my family, and it's a well-deserved visit. So I want to thank you guys for joining me. It's a privilege to be able to see so many people here at this time of the morning, involved in this, and I'd love to help you if I can. So if there's anything I can help you with, please go to our website. It's therateupdate.com. All the information will be down below in the description here shortly. This is a live video, so I have to back end this and go in on the back end and add all that data here shortly. So go to my channel on YouTube, The Rate Update with Dan Frio. Check us out on the web, The Rate Update, and that's my report for today. So thank you all for joining me. Sorry. But I appreciate it. So thanks, guys. I will be back tomorrow morning. I'll do the same way because I don't have any other way to record my videos other than to do the live events. So if you want to ask any questions, I'll see you tomorrow. God bless, guys. Take care, and I wish you the best. See you soon.